The crypto fear and greed index is currently sitting at 38, still within the fear category, but getting very close to the neutral category range. Crypto sentiment is sitting at 31, still in the bearish category. When looking at the bull market peak indicators for Bitcoin, we can see that it is still sitting at a 100% hold rate. Not a single one of these indicators has indicated anything other than 100% hold since setting the all-time high. And after being in this bear market for more than a year, getting very close to what could potentially be the bottom, traders and investors alike are all out there shopping for deals on cryptos, trying to find the perfect deal to pick the absolute bottom. And as always, this is not financial advice and is nothing short of the rantings and ravings of a man who wears blue blocker glasses at least 10 hours a day. But do me a favor and hit that like button before we get started. I would really appreciate it. First off, jumping over and taking a look at the Bitcoin weekly chart, we can see going back over a year when the bear market started, right here during the week of January 20th, 2025. Bitcoin has been trading within an ABC expanded flat correction ever since, setting the all-time high after the bear market had already begun, with the B-wave termination resting right here, set on October 6th, 2025. An Elliott wave ABC flat correction consists of a three-wave move down for the wave A, a three-wave move up for the wave B, and a five-wave move to the downside for the wave C. Now, when jumping over to the daily chart, zooming in on the wave C of this flat correction, this is where I disagree with the vast majority of chartists that I've seen chart out this particular cryptocurrency, is the vast majority of people charting this out are counting this as the wave 1 to the wave 2, coming down counting this as the wave 3, moving up here for the wave 4, and counting this right here as the wave 5. I absolutely disagree with this. The price action that we're now trading in, this is your wave 4. They're counting this wave 3 as a wave 1, 2, 3, 4 down for the 5, counting this as the wave 4 and down for the wave 5 right here. Now I disagree with this. This wave 2 coming down to this wave 3 termination, it's just too close. It does not look right to me. I think a much better count is to count this as the wave 1, the wave 2, and this wave 3 right here is a 1, 2, 3, 4, 5 to complete the wave 3. And this right here is the wave 4. Now this definitely gives us some confirmation when counting this as a wave 4, because we can see right here in this wave 4, it's trading within an ascending triangle pattern, which only occurs within the wave B of a correction or the wave 4 of an impulse. We can see after setting this low right here for the wave 3 termination, price moved up for an A, down for a B, up for a C, down for a D, up for an E, which had a nice throw over of the upper trend line right here, getting rejected perfectly off of this bearish order block on the daily, before price pulled down and started to form the final wave 5 of this 5-wave impulse to the downside. We can see that it came down for the wave 1, back up for the wave 2, formed this bearish fair value gap right here where the wave 2 was rejected, moving into the wave 3, which is also 5 waves to the downside. We can see that the wave 1 of 3 came down right here. We are now trading what is likely to be the wave 2 termination, still having a wave 3, 4, and 5 to the downside to complete this wave 3, which we would then have a wave 4 and a wave 5 to complete this wave 5 of the primary wave C. We get more confirmation of this when we jump down to the 4-hour chart, because we can see after the overthrow occurred right here, setting the E-wave termination, coming down for the wave 1 into the wave 2, that this wave is a 1, 2, 3, 4, 5 for the wave 1, 1, 2, 3 up for the 2, and for the subwave 1 of this wave 3, we can see that it also has a 1, 2, 3, 4, 5. Which where we're trading right now, which is likely to be the wave 2 termination in this area right here, is a 1, 2, 3. So now we have a 5-wave move to the downside remaining for this subwave, a wave 4 and 5 to complete this wave 3, followed by the wave 4 and the final wave 5 to the downside, which I've said many times I believe is going to come down into this range at about 51,500. That certainly doesn't guarantee that it's going to happen, but when looking at the charts, that seems like the best fit, especially to where we now have this ascending triangle pattern resting right here on the chart. It's also very interesting when we dial in here a little bit further. After putting this lower trend line right here for this ascending triangle pattern, back when we set this point right here for this wave 1 termination, I put this line right here, which is what I call a shadow line or a non-dominant trend line, because a lot of times these shadow lines will play in to the price action moving forward. I set that off at this point right here on 322. And it's very interesting because as price came through this 3-wave move up for this wave 2, we can see if we dial in on this right here, that the price action came up and actually double tapped this on the 4-hour chart perfectly. I have not moved this line since I put it in place. Double tap. And by no means should you take these lines that I have here on the chart as gospel. They're just for reference. I'm not exactly sure where these are going to end up being. They're just here to represent what potentially is to come and just a way for me to keep track of things. But as it sits right now, in my opinion, this being the wave 3 termination, coming up for the wave 4 termination, as well as the wave E, this triangle confirms that this right here is in fact the wave 4, which means we still have a wave 5 remaining to the downside, which very well could push into these fib levels. It certainly doesn't have to go this low. It could be truncated. It could just end up sweeping this previous low right here, ending somewhere in this area. But with the size of what we're seeing so far for this wave 1 into the 2 coming down, and for this subwave right here, is this wave 2, for being a subwave, is massive. Quite stretched out, would lead me to believe that this is probably going to be a little bit deeper than just sweeping this previous low. But we also have to make it through this lower bullish fair value gap, which has acted as a support for quite some time now, going all the way back to this area right here on the weekly chart. We can see that price basically wicked through this, but the candle bodies didn't even close within it. It wicked down here for liquidity, but still, at this very moment, not a single bit of any candle body has closed within this bullish fair value gap. That's extremely bullish. We very well could see a situation where price comes down and we just get a deep wick through here. But as it sits right now, this bullish fair value gap is literally at full strength and has done an absolutely incredible job of supporting price thus far. It's not going to be easy to break through this. We can see this bullish order block right here on the daily that's been supporting price since setting this high here. We've had quite a few candle bodies close within it, very close to the bottom. This area has been severely weakened. But it makes perfect sense when you look at the price action right here, because we formed a bearish fair value gap right here on the 4-hour chart. And subsequently, that is exactly where price traded up into before pushing down on this candle right here. If we jump back over to the 4-hour, just to give you another perspective, we can see it formed right here. Price traded down, completed the wave 1 termination of this subwave, traded up for an A, down for a B, up for a C, right into that same area, which matches these fib levels right here. We can see that that candle wick almost went to the 786 perfectly. Now, if this was going to be invalidated, the first thing we would expect to see is price taking out this wave 2 termination. If price trades up above this, then this clearly is not the wave 2. And if price eventually traded up above this wave E, then we're going to have to go back to the drawing board because this clearly would not be the final 5-wave move to the downside. We might be looking at something else. So in terms of a pattern shift, we want to watch this point right here and this point right here to see what happens. If price continues to move to the downside, then we want to keep up with this count right here because we very well should be seeing a 5-wave move to the downside, followed by a 3-wave move up for the wave 4 and a 5-wave move to the downside for the wave 5 to make this wave 3 complete, moving into this wave 4 and down for this final wave 5 here to complete this primary wave C right here. Keep in mind it does not have to come down this deep, but it should be one or the other. Either we take out this high, this invalidates, takes out this high, invalidates this pattern, or price continues to the downside in a 5-wave move. It should be pretty easy to see which way we're going. But as it sits right now, I have no reason to believe that we're going any higher. If it takes out this wave 2, then you'll get me thinking. If it takes out this E-wave termination, then I'm really going to be thinking. But as it stands right now, I have absolutely no reason to believe that anything other than this is what's occurring on the current Bitcoin chart. And when we jump back over to the daily, we can see that this wave 2 termination here is up quite a bit from this one. And when we come down here to look at the CCI, we can see that it's basically equal right here, giving us a straight line right here, but pushing down right here, like this, which essentially would be a form of a weak divergence. You can go ahead and screenshot this if you'd like to keep it. I absolutely love this divergence cheat sheet. It's quite helpful. But in regard to Bitcoin, and I certainly could be wrong here, there's no doubt about it, I still believe that we have this wave 5 to the downside remaining. Now, whether it comes all the way down to the 1.702 at about 51,500 like I believe it will, remains to be seen. We can see on this channel right here that has held price up on this bottom trend line this entire time, that it could also come into play right here, supporting this final push to the downside, which essentially would just give it a nice sweep of this previous low, taking out this liquidity, finishing this off. We could either have a little bit of accumulation in this range, or we could just break back into a new bullish move to the upside. And once this moment occurs, this is where we're really going to have to start thinking and paying attention, because we need to watch this move going up like a hawk, because there are a few different outcomes that we need to be watching for on this particular move that could tell us what we could expect to see moving forward. But we'll get into that at a later time. But for now, keep your dry powder dry and keep your eyes on the money.
They call me a god.